Hey everybody, Mike Burkholder, East County Today, here with Stephanie Whiting of Movement Mortgage. How are you doing?
I'm great. How are you?
Doing well. So we're here to talk about the mortgage industry. Last week we spoke a little bit about real estate with John Fink, and today we wanted to kind of talk about the other side of that, which is the mortgage industry. So for those of you that don't know who you are, can you give a little bio about yourself?
Absolutely. So I, born and raised in Antioch. I went into the mortgage industry in 2003 prior to the crazy crash. Had about a 4-year gap of being in the industry. The market started to come back and I got back in. Purchased my first house back in December of 2015, and that experience was not the best, and I felt like I could do something to make it easier for other people to get financing for a mortgage and make sure it's easier and help them understand what's out there for them. So I hopped on to doing loans, and I've never looked back. I love it. I enjoy it so much.
So when you went through your experience, what were some of the challenges that you experienced?
A lot of the challenges I experienced when we were purchasing our first house had a lot to do with the process, how the underwriting happens and, what the steps are going to be. And I wasn't being communicated to. I was kind of really left in the dark. And kind of getting an idea of, how the process works. And even with myself being in the business, on the operations side, processing and underwriting, I still wasn't being treated as though I needed to be guided along this process. I felt it was very unfair to those who aren't in the business, especially with myself being in the business and still not knowing how to navigate it.
But now you do know how to navigate it.
Now I do know how to navigate it, and so here I am trying to help one family at a time purchase their first house.
So I just want to make it clear, she does know what she's doing.
I do, yes.
Just before.
Yeah.
So you like to refer to yourself as a mortgage ninja.
Yes, the loan ninja.
So how do you become a ninja, and how'd that even come about?
So, it first came about when I came into the business. You have to set yourself apart, and I was looking for a website that was unique to myself. And with as much knowledge as I have in the background of the mortgage industry, I felt, I should and have the skills and the powers that be to help me kind of navigate through the process with my clients so that they understand it. Okay. The website extension kind of came through as Home Loans by Stephanie.Ninja, and that's kind of how it all came about. And that's how I became and coined my name as the Loan Ninja. I like to make sure that I find the best product for the loan program for my buyers and make sure they understand it from beginning to end. And if I can't do it myself, the loan, for example, I work with the realtors, and I literally hand deliver those loans to people I know that can take care of that for me.
So are you physically a ninja though?
Physically, no. Mentally, yes.
Darn it. So for everyone out there, can you kind of give a little overview of the market right now in trying to get a loan and kind of what you're seeing?
Absolutely. So I've noticed that there is a education gap when it comes to home financing. The market right now has started to kind of ease its way into kind of more lenient credit. There's a misconception that, if you have bad credit, you can't obtain a mortgage. And another misconception on what's good credit and what's bad credit. So we've been seeing changes in the guidelines allowing for, more credit challenged borrowers to obtain mortgages, which is what we need.
Can you give one example of that?
So, for example, I had a buyer who had no credit scores, and he was able to purchase a house. He did put 20% down, so there's got to be some sort of give and take. You can purchase a house as a first-time home buyer with a credit score as low as 580. So it kind of depends on, your individual situation and how your puzzle piece kind of fits into that American dream puzzle that everybody's hoping to obtain. So there are programs available for down payment assistance, which is huge. That's how I bought my house. I'm a testimony to those programs actually working, and want to scream from the mountaintops that there are people who can buy houses with limited funds available, and there are programs that can help assist them in doing that.
Now, does that kind of fall back into what was going on in 2008-9 with giving loans to anybody, or are the loans are still given, but they know people could actually afford the homes?
So yes, so the latter is more true. The during the crash, prior to that, I kind of saw firsthand what was happening. We were literally throwing loans at people and weren't verifying the information that was being given to us. I think a lot of that played into the crash because these people were not being educated in the programs that they were put into, and then the housing bubble just kind of burst, and it was bound to happen with the amount of money that was being lent irresponsibly. Nowadays, we're verifying not only your income, your bank statements, but we're scrutinizing it, making sure that if there's any sort of red flag, we're addressing it. When I say that, guidelines have, been a little bit more lenient, that doesn't necessarily mean that we're not verifying what we're looking for. We're just saying, let's give them a little bit of a break. We know student loans are a huge issue right now with millennials, and Fannie Mae is, they've been kind of addressing that in their updated guidelines over the recent past 3 to 5, 6 months, in order to kind of help those millennials help purchase homes as well.
So you mentioned red flags. What are some examples of red flags?
Red flags that would be something that underwriting would consider, risky is, overdraft fees, making sure that you as a borrower are managing your money correctly. If we see that you have one or two kind of here and there, we could understand that might be an oversight. But if we see, a year to date of, $1,000, $1,500 in overdraft fees or non-sufficient funds fees, that's a red flag. We don't want to be able to lend you hundreds of thousands of dollars and for you to then turn around and default on a mortgage. That if you can't handle credit cards, how do we really know that you can handle, or even your own money kind of inflow and outflow? How can you handle a mortgage?
Sure. Now, what about this myth that you need 20% down? Is that still preferred, or?
Good question. So that is a common misconception that you do need 20% down, and that's not the case. So FHA, if you're a first-time homebuyer, if you haven't owned a home in the last 3 years, that's when you're considered a first-time homebuyer. You can put down as less than 20%. Your minimum down payment would be 3.5% on an FHA loan. Now, there are programs available to help assist you with that 3.5%, because not a lot of people these days have $20,000, $30,000 that would cover that 3.5% plus closing costs. Sellers right now aren't typically paying for those closing costs. That was in a buyer's market back when we were throwing loans at people. So there's down payment assistance available to kind of help offset the difference, and that's what I was able to utilize. I was able to move in and buy my house with literally about $6,000, because if it wasn't for that down payment assistance, I wasn't in a position to buy a house right then. We were working on saving, and it's tough to do when you've got a family and kids and 2 jobs, and it's tough, and we get that, and the market and the agencies who provide that down payment assistance know that, and they're here to help.
So you mentioned these programs. So for you, what's the lowest percentage that you've seen or that somebody could put down on a house?
So FHA allows minimum of 3.5%. Now that doesn't mean that your mom or dad or aunt and uncle can gift you that 3.5%. They're more than welcome to do that. And then you would only have to worry about closing costs. Conventional loans even go as low as 3%. So it kind of really depends on what is the best kind of program to fit your financial situation and how you're going to afford that mortgage on a monthly basis, and how that in turn works with your income and then any other expenses you might have, credit cards, car payments, that sort of thing.
So there's no programs out there that you could do 1% down?
The Movement actually has a program that we've recently came out called the MAP program. So it's essentially a down payment assistance program, and depending on your financial picture, you can either get 2% or 3% down payment assistance, which potentially would give you either a 1% down payment or 0% down payment, and then you would only worry about closing costs. So there are programs out there. There's still always going to be a down payment requirement. The question is going to be, where is that down payment going to come from? Is it going to be coming from down payment assistance, or are you going to be paying for that down payment and the closing costs? So the math eventually all kind of works out in the same. That's why it's important for somebody, any borrower or potential purchaser goes in and sits down with a loan officer to go in depth into what's available to them, because down payment assistance programs have restrictions, credit and income restrictions. So you got to kind of fit into a box in order to obtain that. And if you don't fit into that box, what are the other options that are available to you?
Got it. Walk me through the process of somebody that wants to buy their house for the first time, and what someone should really think about doing to prepare for that process.
Good question. So typically what will happen is their lease becomes getting ready to come up due, and the landlord's raising their rent. And so then they start questioning, well, I don't want to pay higher rent. This is crazy. With rents in the Bay Area, it's typical. A lot of times, and prior to the crash, they would reach out to the realtor and then say, hey, I'm interested in buying a house. Okay, great. Let's go look. We'll make an offer. Mm-hmm. And then you get financing, and then you close on the house. Well, it's shifted since the crash, and now realtors everybody's time is valuable. So what we want to do is make sure that you qualify for the home that you're looking for. So the first step would be to sit and get with a loan officer, sit down with them, have them run your credit and look at kind of what your credit profile looks like, make sure there's no errors on there. Mm-hmm. And then look at your income and make sure that, based on what your income is and what your credit profile looks like, what you will be able to afford comfortably without being what I call house rich and money poor. We don't want that for you either. So it's important. It's not
very fun.
No, we don't want you to go home and that's it. Who wants to do that? So it's important for you to know what you're comfortable with as far as a budget's concerned, and then to sit down and kind of talk about, what your max budget is, what you could be approved for, and then what you're comfortable paying.
So before you start that process, should someone pay off their bills or anything?
No. So the best thing to do would be to sit down with a loan officer, have them pull your credit and kind of see what is there. Because if you don't need to pay off credit card debt, because the credit bureaus are always 30 days behind. If we run your credit now and you have really good balances and your credit's in the 700s, there's no reason for you to turn around and rush and pay off all these other debts, because that could bring your score down, and that's not what we want. We would rather look at your picture and go, okay, if your scores are a little low and we want to get the best interest rate, there's an opportunity for us to do what we call a rapid rescore. So we take information and look at the credit report and say, well, this information's outdated a little bit. Let's give them an updated statement for them to give us an updated score without rerunning credit. So then you get the best credit score based on the most current information. And then they look at, the affordability standpoint based on the income. Once all of that's kind of in play, the loan officer would send the file over to underwriting for what we call as a pre-approval, or also a commitment letter. That gives the realtor the green light to go home shopping. They don't want to take you as the buyer out to search for homes when you're pre-qualified, because that essentially means that the underwriter hasn't looked at your information. And everybody's human. Yeah. We make mistakes. What we like to do at Movement Mortgages, send the file to the underwriter, have them underwrite it up front, and we usually get an answer from the underwriters within 6 hours. So we know how much you're going to qualify for, that the underwriter is okay with everything that's in your file, and all we need to do is to find a property.
So once you get the golden ticket, which is the
the pre-approval,
during that process, what should people do?
To continue to maintain what their current spending habits are. We don't want them changing jobs. We don't want them applying for 20% off at Kohl's because they're buying $100 worth of clothing. Any new inquiries on their credit report can affect what happens from an affordability standpoint from a home loan. So no new debt. No new cars. I can't imagine it happens all the time. Not until you buy a house. It happens so many times where borrowers get excited. They start home searching, and their credit is good, and I really don't like my car, and they turn around and trade it in, and now their payment has gone up. Keeping your loan officer, kind of in the loop, changing jobs, which is not a bad thing. If you're going to move and, get a raise by changing positions within the company or even changing companies, absolutely, that's not a problem. It's a matter of making sure we're in the loop so that if there are changes, we can go back to underwriting and say, hey, just so you know, here's updated income. My borrower's changed jobs.
So I'm sure out here a lot of people either move out to the area for a new job from out of state, or whatever the circumstance may be.
Absolutely.
So it's just basically a communication thing.
Huge. So like I said, no new debt, don't run your credit. Like, those are going to be things that could put a wrench into things that could prevent you from buying if you start buying washers and dryers before you actually move into the house. Like, those things can present red flags to underwriting.
Now, right now what's going on is a lot of people are concerned about a potential bubble, and that you guys are giving loans out to just anybody, which you already said isn't true. Do you think that the market is in a bubble or headed to one?
I don't, in my opinion, I don't believe so. Do I think that prices are, continuously rising? Yes. And I think a lot of that has to do with the supply and demand. We don't have a lot of inventory out here in East County for first-time home buyers. So anything under $450 is tough to come by. It's going to kind of set a needs versus wants for those buyers. Are they okay with living in Oakley versus Brentwood, or living in Antioch versus Oakley because that's what they can afford? I like to stress to the first-time home buyers that it's just a matter of getting into the market. This potentially is not going to be your forever home. You're going to live here for a little bit until you're able to capitalize on the equity on that house and then move. Because there's a shortage of inventory, we look at, people who do have money can get in, and if they're that desperate, they're willing to throw money to get into contract and buy that house. Are they paying for houses that are overvalued? Maybe. Are they paying for houses that are not worth what they are? So an appraisal may come in at $500,000, but if that borrower really wants that property, they may be willing to pay $20,000 in cash just to get that property, even though it's only worth $500,000. And that's what we're seeing right now with the shortage.
So it's more of a demand issue.
It's a demand issue.
Not you guys playing games.
No,
not realtors.
We're still verifying all the information.
So it's the public that wants the homes.
Yes,
not you
not
guys
necessarily.
Giving...
Yeah, we're not in the business for defaulted loans. We need to make sure, no matter who's buying a house, that they can afford it, because we lose money if you can't pay the mortgage. It doesn't make sense.
Which was found out
in 2007.
2007.
In 2008, yeah. So I don't think we're in a bubble. I think once there are enough people in the area currently who are just kind of either, one, sick of California, two, going through job changes or transfers and things like that, or downsizing, is when, we'll start to have a lot more inventory, but it's just a matter of time.
And we are a popular area for people out of the area to come, because it's so affordable.
It is.
When you look at the South Bay, San Francisco, Oakland.
It's huge.
It's a great opportunity for people that want to sell their homes to make a little bit of profit.
Absolutely.
Either move up, move down. So what about the people that currently bought a home 10 years ago, 5 years ago, and now have some equity? What's that process like?
If they're looking to move, obviously, if they're looking to buy another house, either in another state or in another city, they still got to go through the same pre-approval process. Their income and their assets and everything's still going to be scrutinized. The main thing for people who currently own is making sure that their current house goes up for sale, and when they find a new house, that those kind of close, I don't want to say simultaneously because that's very hard to do, close within each other, so that the proceeds from the sale of that house can be used towards the purchase of the new house. It takes teamwork, because you have the lender, you have the realtor selling the house, and then potentially a new realtor helping you buy a new house. So it's going to take planning. It can be done. What Movement Mortgage does with the 6-hour underwrite kind of takes the guessing out of whether or not they are qualified enough. And like I said, if they get pre-approved with Movement, all they have to do is find that house. And a matter of kind of making sure the close dates of the current house and the close dates of the new house kind of go within each other quite closely, if at all possible. So that's really how that process would work. It can be stressful, but there are ways to help make that process a little bit smoother and seamless.
Do you have any happy stories of people that you've helped that you maybe just want to share?
Oh man, I have so many of them. I had a client who was introduced to me by an agent that I've been working with. He came in, he owned a house eons ago is what he told me, and he was concerned that he'd never be able to buy again. Very, very funny guy, and liked to make jokes. If you can lend me money, you'll lend money to anybody. The guy had good credit, he had great income, he didn't have a lot of debt. He was just very skeptical, hesitant, not just, he kind of was going into it believing that he was going to be disappointed. I was able to pre-qualify him right on the spot when meeting him, was able to get him to pre-approval, and I was ready to go. They looked for houses not for very long, maybe a couple weeks, and he got into contract, and he was just still like, pinch me, are you really sure? And I'm like, I promise, as long as we get through the appraisal and your conditions, like, we're not going to have any issues. And he was like, okay, are you sure? And I was like, I swear, just trust me. And we were able to get him into closing within 10 days after he found a house. And we signed docs and closed the loan in 21 days. And he's ecstatic. It's, his son goes to school at Park Middle School, just started middle school, and they're literally within walking distance of the school. And so the house he's in love with, it's right around the corner, has everything he needs, and financing went on without a hitch, and he's just still kind of can't believe it. Him and his wife were so thankful and hugged me beyond means, and we're just so excited. And they actually invited me for their housewarming party coming up, and so I'm excited to go to that, because it's the feeling I get when they're excited that this actually happened, and like they're dreaming, they're really like in disbelief that they bought a house, and I had something to do with that. It's something I'll never get over. I truly enjoy what I do, and I'm excited and giddy just like them when they get into contract, and even when they get keys, I'm like, yay! So excited for them, because I know what that's like. When I bought my house, I was like, oh my God, finally I have my own house. I could do whatever I want. I don't have to ask anybody else to do it. And
awesome.
And for that alone, that feeling is worth its weight in gold.
So how many loans do you think you've written?
I don't know, but I don't look at it as how many loans I've written. I look at it as how many families.
How much happiness have you helped?
Oh, so much happiness in my short period of being with Movement Mortgage. I love it here. The company is amazing, and I love being able to kind of spread that joy onto my clients when they buy their first house. It's something I can't even explain.
So you're using your ninja skills for good.
Yes, I am.
So why don't you tell the audience how they could get a hold of you before we wrap it up?
Awesome, I'd love to. So for information about how to purchase a house or to do a refinance even, you can go to Home Loans by Stephanie at Ninja. And Home Loans by Stephanie.ninja is the website. And then you can email me at stephanie.whiting@movement.com, or you can call or text 925-305-6639.
The beautiful Stephanie Whiting, Movement Mortgage.
Thanks, Mike.
Thank you so much.
I appreciate it.
Join us next Sunday as we will have another guest for our Sunday conversation. Have a great weekend and see you soon.